Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks that are gapping higher or lower at the open create an opportunity for traders. They're gapping higher or lower as a result from some earnings announcement or another related news event. The opportunity is when traders can identify a specific price where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. In my course, traders learn the exact criteria we're looking for with these stocks, what type of volume are we looking for, exactly which stocks does this work the best with, and most importantly, how do you calculate these specific price levels where stocks will first be drawn to and then have a price reaction from in the other direction. The other thing I do is give traders an opportunity to get my gap trade sent to them each and every day at 9 o'clock in the morning Eastern Standard Time, 30 minutes before the markets even opened for business. Here's a copy of the email that went out to subscribers this morning. As you can see, it arrived shortly after 9 o'clock in the morning, and that's Eastern Standard Time. Now this morning, we had 8 possible gap trades on the board. Not all these trades are going to hit the specific levels that we're interested in, the specific price levels that create a high probability trade. But when they do, that normally is a high probability trades, and we only want to take the highest probability trades we can find. That's what sets successful traders apart from those that are not finding the success in the markets that they would like. Now, out of this list, 3 actually came into their price levels. 2 came into their price levels. 1 was a kinda sorta. We're going to go over that also. The first one we'll look at is Skyworks Solutions, SWKS. Gap lower, support levels are $107.79, and then I gave 2 lower levels after that if the stock was to trade lower. Stop and profit target is about 50 to 95 cents. These are minimum profit targets. This one was a little quirky, but we're going to go over it when we get to the charts. The next one we'll look at is Avis Budget, CAR, gap lower. Support levels are 35.55, 34.11, and even a third level at 32.84. Stop and profit target is about 30 to 55 cents. Again, minimum profit targets. Now, the last one we'll look at is CRC down at the bottom. I say gap higher. Resistance levels are $16.95, and I gave another level up at $19.18 if the stock was to continue trading higher. Stop and profit target is about 20 to 35 cents. Again, minimum profit targets. Let's go ahead and pick apart some charts. Since you were already looking at CRC on the screen, we'll start with this one. The stock closed yesterday all the way down at $14.13. The stock was gapping higher at the open, and the level that we identified, and by the way, this is the same level that any trader that's taken my course is able to calculate and come up with on their own. The level was $16.95. You can see pretty clearly what happened. The stock began to trade higher. When it reached that level, it made a high of $17.10, just piercing through by a little bit, staying within the stop loss limitation, and just minutes later, the stock was already at a low of $15.42. That's a tremendous pullback off that level. That's over a $1.50 pullback in minutes off of a $17 stock. That's a tremendous gain. It's a home run. And in my course, I teach traders how to take some of the profit off the table at a minimum profit target and let the rest run and turn trades like this into risk-free, emotionless trades, allowing them to get as much as they can out of the trade in terms of profit. Home run trade, no doubt. Here's Avis Budget CAR. Now, this stock closed yesterday all the way up at $41.44, getting a pretty decent haircut at the open. It opened lower and traded lower. When it came into the $35.55 level, went slightly below, but within the stop-loss limitation, and in the next 10-minute candle, it bounced as high as $35.79. Now, it's only a 24-cent bounce, and it really was less than the minimum profit target that I suggested in my email in the morning, and then the stock continued lower, bounced back to the flat line at $35.55. What is once support becomes resistance. That's one of the things that's important to realize from a technical perspective about trading, and now the stock is trading lower. So some traders may have gotten a minimum profit out of the stock, and some traders might have been holding on for more and ended up taking a stop out, which is precisely why we use stops. So the stock did bounce a little bit, but not really enough. So I'm going to count this one as a bad trade, and that happens, folks. We can't win every trade. It's impossible. What we're trying to do is put the probabilities and the odds of success in our favor by only trading the premium levels. You saw that the stock did get a bounce at that level. It just wasn't enough, and the stock had so much selling pressure, it just traded lower, and that's why we use stops. We just can't win every trade. It's impossible. But what I will tell you is we win most of the trades. The next one we're going to take a look at is Skyworks Solutions, SWKS. Now, this was interesting. I can't count it as a winner, but it just goes to show you the power of these price levels and what happens at these price levels. The level that was calculated was $107.79 to the penny. Look what happened. The stock made a low in this candle of $107.81 and bounced higher, and just a few minutes later, the stock was at a high of $109.30 for a nice bounce higher, a nice scalp trade for anybody that front ran this particular price level. For those of you that don't know, a front runner is somebody that jumps in just ahead of the price level and leaves everybody else in the dust. The reality is, sometimes we miss levels by a couple of pennies. That's just the business. That's the way it works. Doesn't happen a lot, but it does happen from time to time. This one missed by 2 cents and had a nice rip higher. Some traders may have caught this trade by jumping in early. I did not. I had an order sitting at 107.79. I was never filled, and it was a no trade for me. But that's just the way the dice rolls sometimes. The important thing to realize is you can see the importance of these price levels that you learn how to calculate in my course at Lazy Gap Trader. If you want to learn everything there is to know about trading the gaps successfully, then come over to Lazy Gap Trader, check out my course. This is a strategy that you can use each and every day for the remainder of your trading career. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.